there was a little known change that was happening the same day as the approval of the ETFs, which was there was a new line of futures being introduced at CME. And basically what that means is there were going to be a whole bunch more short sellers on the other side. So I think what happened, I don't have any inside baseball, but what I think happened was some of the big dogs accumulated Bitcoin leading up to the launch and, in accounts. And that pushed us from kind of 40K up to that, momentary spike to 47. And then you have the launch and they start selling to themselves, right? So they could secure supply. But then the people shorting the futures jump on and you had the, flash crash down and everybody said, oh, see, it's a total failure. I'm like, what are you talking about? You don't judge a launch in minutes or days.
Today's video is a clip from my interview with hedge fund manager and founder of Morgan Creek Capital, Mark Yusko. If you want to see the full interview, it's packed with price predictions and Mark reveals what he thinks is the best exit strategy for crypto in 2024. If you want to check it out, it's the first link in the description. But without further ado, let's jump in with Mark Yusko. So it's been about a month since we saw the launch of the Bitcoin ETFs, and I just want to get your initial thoughts over the last month. Were you impressed with the inflows? Were you disappointed, or did it sort of go exactly how you thought it would play out?
Great final part of the question. So, it went almost how I expected it to go, except for the last little wrinkle, which was I didn't anticipate Vanguard, UBS, Bank of America, Merrill Lynch basically coming out and saying, no, you, our client, can't put your own money in this approved product. I really thought this was like the last barrier for all the big advisors to gain access. And so that surprised me a little bit. Now, when I think about it, it doesn't surprise me at all because they got the call from Ms. Warren saying, hey, we don't like the fact that Gary went ahead and approved these. We don't think he should have. He kind of had to. I mean, the courts told him he had to because he had no reason to deny them. And so from that perspective, I didn't anticipate that. I thought the inflows would be more 10 billion-ish in the first few days, and we only had, more like 3-4. So that surprised me a little bit. On the other side, it played out almost exactly how I thought it would. You had the inflows coming in, which were robust. I mean, BlackRock's up to over 3 billion, Fidelity's at 2 billion. Bitwise and ARK are nipping at their heels at just under $1 billion. So that's all great. But the outflows from GBTC were expected as well. But I think people kind of didn't think about that when they were thinking about, number go up as soon as the demand increases. And the part that I really didn't anticipate, although I did tweet out about this a little bit, there was a little known change that was happening the same day as the approval of the ETFs, which was there was a new line of futures being introduced at CME. And basically what that means is there were going to be a whole bunch more short sellers on the other side. So I think what happened, I don't have any inside baseball, but what I think happened was some of the big dogs accumulated Bitcoin leading up to the launch and, in accounts. And that pushed us from kind of 40K up to that, momentary spike to 47. And then you have the launch and they start selling to themselves, right? So they could secure supply. But then the people shorting the futures jump on and you had the, flash crash down and everybody said, oh, see, it's a total failure. I'm like, what are you talking about? You don't judge a launch in minutes or days. And just for perspective, right? 2 of the 3, the BlackRock and the Fidelity are number 5 and number 8, I think, of the top 10 selling ETFs in the world. That's pretty cool. And together, the newborn 9 did better than the entire class of 2023. So, I mean, you can call it whatever you want. And, the fact that we're not at 100K Bitcoin, I don't know why anyone thought we were going to be at 100K Bitcoin overnight. It's a long answer, but I'll give you one last thing. I made a statement leading up that, there's 30 trillion in accounts managed by UBS, Merrill Lynch, Raymond James, Vanguard, etc., controlled by, advisors, boomer money. And I said at least 10 basis points of that is going in this year. So that's 30 billion. I actually think 1%, 100 basis points, is going in, and that's 300 billion. And I think I'm right on this. That 300 billion would be more fiat converted into Bitcoin than all of the history of Bitcoin. And I can't prove that, but I think I'm right in that so much of Bitcoin's market cap is not $1 went in and $1 market cap. It was $1 went in that's now worth $100 or $1,000 or $25. And so that 300 billion that I think is coming is going to move price pretty dramatically in the future.
I thought it was funny seeing everyone talk about it was a failure. And I think everyone, well, not everyone, but maybe people newer to the space was expecting a God candle on the approval. And then you have the two Bloomberg analysts on Twitter, James Seyfart and Eric, and they're talking about every record that they're breaking and how huge they've been. And it's like from every metric, if you actually look at it, besides the price, they were an overwhelming success. And I think it was James Seyfart, he also put a graph up of what healthy ETF growth looks like. And it starts off very slowly and then it's a big pickup. So I think these things just take time. And 300 billion would undoubtedly move the needle over time. That would be insane.
That would be big. And the other thing to that point, which is really important, if you go back to the GLD ETF, the gold ETF, because at the end of the day, Bitcoin is a commodity today. Now, we can all think someday it'll be a currency or a unit of account or a monetary system. Probably will be all those things. But today, it's a commodity. Gold is interesting. Gold is the only asset up to this point that is both a commodity and a currency. Right? I mean, silver kind of, but gold really is the monetary base. And when the gold ETF, it was delayed, almost 3 years. Well, why? Well, JP Morgan and others like to short gold, and they kept the price down because if the price of gold runs away, it's an indicator of the devaluation of your currency, right? Because if you think about it, gold for 5,000 years, a single ounce has bought a fine person's suit. From Cleopatra's time to a suit of armor to a suit on Savile Row today, a single ounce will get you a fine person's suit. Yet currencies have come and gone, right? The denarius in Rome, gone. The drachma, gone. And, we still got the pound and the yen and the dollar, but from 1776 to 1913, a dollar was worth $1. Today, a dollar's worth 3 cents. And so gold in 1913 was $33. Today, it's $2,000. But wait a minute, a single ounce still buys a fine person's suit. So what happened? Well, the money got worse. And Bitcoin's the same way, right? We don't price gold in gold. We price gold in dollars or yen or euros. We don't price Bitcoin in Bitcoin. One Bitcoin's one Bitcoin. That doesn't change. What changes is the amount of a currency you need to get it. So if you look in Venezuela, there's never been a bear market in Bitcoin because the Bolivar has gone straight down, or in Turkey or in Argentina. And so if gold was allowed to fluctuate relative to the dollar freely, it'd probably be $4,000 or $5,000. But they spoofed the price of gold through the futures market. Well, what does that mean? Well, in the old days, if I wanted to sell you a commodity, I actually had to have the commodity to sell to you. and I had to deliver it to you, and you had to take delivery, and we had a transaction. Well, then they created futures contracts, which said, well, I don't actually have to have gold or oil or grain. I can just sell you a promise to go get some. And as long as we settle up the contract before I have to deliver, I don't even have to have any. So people can create out of thin air fake commodities. That seems like a bad plan. Well, it also means if I can create it on the long side, I can go short it naked, which is supposed to be against the law, but I can do that in the futures market. So gold prices went through a very long period after the GLD was approved, 9 months, went down 40%, bounced around the bottom for 9 months, and then went up 10 times. Because ultimately the demand overwhelms the manipulation that's happening in the futures market. And I think the same thing's happening here. And you're seeing it even today, right? I mean, with the little wick up from 43 to 44, you go, well, what's that? The demand is relentless, and the naked short selling is equally relentless, and that's going to be a tug of war for a while. Some days one's going to win, some days another's going to win. But over time, as that 300 billion comes in, price has got to go up because the demand, the supply is going to stay relatively limited.
So forgive me if this is wrong, but wasn't it in 2021 when they launched the futures that marked the exact top and is that correct?
And in 2018. Oh no, Jamie, this is an important point. So on December 17th, 2018, so, the price had gone to 10,000 for the first time, and it wicked over 6-7 weeks to 20,000 on December 17th. December 18th was the day of the first futures contract. And it was small. It wasn't even a very big one. And I actually tweeted out that morning saying, this is going to be bad. And now I didn't know it was going to go down all the way eventually by the middle of 18 to 3,000. I said it was going to fall probably back to 10, where because at the time fair value was closer to 6,000 to 8,000. So long story short, it was literally the day of the peak, and we went down up for a year until early 19, and then we started back up. By December 16th, 18 was the very bottom at 3,200. Then in 21, to your point, November 6th, 21 was the day of the peak again, but this was the big futures contract. This one let everybody and their sister go short Bitcoin and push that price. And the problem is we were already 100% above fair value. Now, what I keep talking about fair value. What is fair value? Well, fair value comes from a Metcalfe's law model. We can model any network based on Metcalfe's law. We can determine the fair value based on the number of participants and the number of connections and the nodes in the network. And Tim Peterson has done a lot of great work on this. And long story short, if the fair value was $10,000, then, and we go to 20,000, we're eventually going to fall all the way back to 10 and usually fall through, and you get really undervalued. Then the investors come back and they buy the asset. And so if you remember back when GBTC was launched, so GBTC was launched and we were about $10,000, and suddenly we had this wick all the way up over, the holidays of 2020. 2020, holidays 2020, up through 60,000. In January of 21, we hit 60,000. And then Elon did his famous tweet, we're not going to take it anymore. And it went down 50%. We went from 60 to 30. And it wasn't overnight, but, over 3 months. And people by summer were like, oh my God, it's over. It's going to zero. Yada. And then people started buying GBTC, and Michael Saylor started buying. And boom, we went all the way to the 69 on that November 6th date. The problem was fair value at that time was only around 30. So here we are at 70 or 69 or 67, I guess. And fair value is 30. So we definitely had to fall. But now you've got the short sellers in the futures market pushing the price down, and we went all the way down. Then we stabilized in June, and then Terra, I would say it's kind of ironic that Luna went to Terra, right? I mean, the moon fell to the earth. And so that was the start, and then Three Arrows, and then, BlockFi and Celsius and Voyager. But then the big killer beast was, Sam Bankman-Fried, and everything got wiped out, and we made that low at kind of the high 15,000s. And again, people were like, oh my God, we're going to zero. And like, the more people say we're going to zero, that's got to be the bottom. And of course, it was the bottom. And then we just marched incessantly up, to the launch of kind of where we are today. So, what I think people are missing is the halving coming up in a couple months, and that's going to double the fair value. So fair value today is somewhere low 50s. We'll just call it 50 to round numbers. The halving doubles fair value. Well, why is that? Well, you think about it. If the block rewards get cut in half of the miners would suddenly go out of business because their costs are fixed. So the price actually has to rise. Well, it doesn't have to rise, but it does rise because buyers and sellers are going to equilibrate, and no one's going to sell unless they get a better price because they got to cover their costs. So there's a supply-demand change, and because the supply shrinks and the price goes up. So that's interesting. So that says that the fair value would be 100. Well, by summer this year, we'll enter what's called crypto fall. So we're in crypto summer right now. Crypto fall is where we get the parabolic craziness. And it's likely that, through year end this year, we'll have some craziness. I don't know how high we go, but we'll probably go really high. And then, we'll have another bear market and we'll enter crypto winter, in 25. But anyway, that's kind of what I see happening.